All right, good evening, ladies and gentlemen, and welcome back to the Australian Gold Weekly Review. This is episode 14, and thank you so much to everyone who's been tuning in for our past episodes. We really appreciate the feedback that's been coming through our recent videos, and our views have taken up a spike. So thank you so much for sharing the videos with people who you think may need it to supercharge their investing journey. And if this is your first time watching, welcome. This is a series where we uncover moves in gold, silver, oil, and the ASX Gold Index, along with some specific stocks in the Australian precious metals and mining sector that we believe need your attention as a part of your investing journey. We'd also like to let you know that none of the content that we discuss in this video further qualifies as financial advice, and that you seek and we recommend that you seek a licensed expert before making any form of investment decision whatsoever. And last but not the least, today we have with us the managing partner of GoldHub Australia and the Australian Gold Fund, Mr. Brian Chu. How are you, Mr. Brian?
Hi, Ved. Good to be here. And very interesting week that we just had.
Yeah, very interesting week we just had, and very interesting last hour that we've just had. The video was not scheduled to start recording at 10:30. It was supposed to be an hour back, but only Mr. Brian and I know what has gone on in the last hour, and you will get to see our results very soon into this video. So without any further ado, let's get started and discuss everything that's happened throughout the week. Let's start off with gold. Did end the week at US dollars 4,012 per ounce, but not exactly the narrative that we would want it to be for gold, because gold did fall down all the way to 3,900 US dollars an ounce this week. It also tested the US dollar 3,800 range before it shot back up to US dollars 4,000 due to the rate cut announced by the Fed on Wednesday and tensions surrounding trade talks between US and China cooling down. However, the rally was not able to pick up at full speed due to Fed's hawkish tone during its rate cut announcement, suggesting that there may not be any further rate cuts this year, which is opposed to prior market expectations of a rate cut in December, which we had been talking about in our past few episodes. So, Mr. Brian, what do you think about gold's momentum and the path ahead for gold, considering the fact that we've had almost all the trade tensions cooling down, the most major one being discussed in South Korea just a few days ago. We've seen the Fed not cutting any interest rates in December as of now. So the fundamentals aren't looking very strong at the moment. So what do you think the path ahead for gold is?
Well, if you look at the week's move with gold, it actually, I think, pulled back somewhat. As we're speaking right now, gold is just above 4,000 US dollars an ounce. And we had seen it go down to as low as about 38.80 US dollars an ounce. I think it may have been Wednesday night or Wednesday overnight trading in the US. And then it bounced up to over 4,000. And then we had the Federal Reserve announce the rate cut, which caused a momentary bounce. Actually, leading up to the Federal Reserve rate cut, gold was higher. Then there was an announcement of the rate cut. Then gold pulled back. Then during the day trading in Australia on Thursday, it bounced back up to over 4,000. And we've been just basically sitting around the 4,000 level. My view is that even though the Federal Reserve says that they don't plan to cut interest rates in December, they can talk all they like. We've just seen their track record of saying one thing a few months before, and then they had to change their mind when it comes to the crunch. So I'll believe it when I see it, with the Federal Reserve not cutting interest rates in the December meeting. At the moment, the market is pricing itself on that. Yes, geopolitical tensions are somewhat calmed down a little bit. Inflation is actually, I think, real inflation, what we're actually experiencing, inflation, that's actually still relatively strong. So my view is that the market is currently in a tug of war between is the economy stronger and therefore supports a less safe haven purchases in gold, and therefore gold's down, versus the longer term viewpoint, which is no government and no central banks are planning to cut the currency supply and therefore slow down inflation and therefore push the price of gold down in a sustainable level. So I'm leaning on short term, gold could be still on target to hit maybe $3,800 an ounce sometime before the end of the year, and silver to potentially be also pulling back from these current levels. But again, my view on the medium to long term hasn't changed despite the latest developments.
Right. Thank you so much for that, Mr. Brian. Now, moving on to silver, as you just suggested right now. Silver closed the week at US dollars 49.16 per ounce, so not quite following suit with gold this week as it's increased by 1.5%. Improving industrial sentiment and tightening supply expectations are the drivers behind silver's price increase this week, because there was a rise in the global manufacturing PMI readings, particularly from China and the Eurozone, which signaled a rebound in industrial activity. Investor appetite for cyclical commodities improved following new Chinese stimulus announcements focused on infrastructure and clean energy manufacturing. Meanwhile, oil has decreased to US dollars 60.23 per barrel, as it was pressured by a combination of supply-side expansions and weakening demand expectations as well. US crude inventories rose for a third consecutive week, while OPEC's latest monthly report indicated higher output from several member states. On the demand side, the International Energy Agency, or the IEA, revised its 2025 consumption forecast downward, citing slower growth in China's transport and manufacturing sectors. And finally, the ASX All Ordinaries Gold Index gained only 65 points this week. So having a look at magnitude, this is the lowest magnitude that we've seen in the ASX All Ordinaries Gold Index ever since we've started the series, because it's almost always triple digits and nothing below 600 or 700 points. But this week it's managed to increase by only 65 points. So that's quite refreshing to see. Many gold producers, especially majors, saw big drops on Tuesday's market open and took the rest of the week to recover from its drawdown. This is quite similar from a couple of weeks ago, where most of the major gold producers had fallen down by 8 to 10% within a single day. So, Mr. Brian, what do you think the path ahead for this index is? Because despite the fact that gold's rally isn't continuing the way it was since its inception in August, and the narrative being gold prices being bearish for the short term, at least, we're still seeing these producers increase by 3 to 4% a day at many different points of time during the week, except for Tuesday this time. So what do you think is still causing so much buying pressure for these stocks, especially considering the fact that our in-house ASX gold stock valuation index is still in the overbought region?
So let's unpack the question that you asked. Firstly, the ASX Gold Index rose by 65 points compared to last Friday. Now, this reminds me of the good old displacement versus distance traveled type of questions that we used to do in science and in physics. So it looked like the ASX Gold Index hasn't actually moved much because it only rose by 65 points. You look at the intra-week movements, I mean, that was actually quite a roller coaster ride, because the ASX Gold Index actually dropped by 736 points, which was almost 5% on Tuesday trading. And that was actually a more brutal move if you look at the individual stock performance rather than just looking at the index, because last Tuesday, on the 22nd of October, last Wednesday, in October 22nd, the ASX Gold Index fell by about 1,300, almost 1,400 points, which was about 8%, 8.5%. Now, that was a really brutal day. But this Tuesday, you actually saw a few of these companies actually fall by double-digit percentage points. And there was a modest bounce on Wednesday when it came back up by about 300 points. And today, the ASX Gold Index rose by 600 points. And as you pointed out, that a lot of these companies actually rose by, some of the larger gold producers actually rose by 3-4%, even 6 or 7% in the case of the unhedged gold producers such as Regis Resources. And also, let me quickly, Kingsgate Consolidated rose by 11.7%, Regis rose by 5%, Vault Minerals 5.8%, West Gold Resources 5.4%. So it felt like we may have actually found a low for now in terms of the technical side of things. The ASX Gold Index, I think in the last 2 weeks, have actually sold down pretty heavily from the highs of 17,800 points to the low of 15,200 points in the space of 9 trading days. It fell by 2,600 points or 15%. That's a pretty sharp move. And we actually saw it touch the 40-day, it actually went below the 40-day moving average. So if we consider from that perspective, we may have actually seen a potential bottoming out process. But depending on where gold goes in the next 2 weeks, should there be further news to weaken the price of gold and actually take it down to $3,800 an ounce, we may actually see further pulling back of the ASX Gold Index. And if you look at the fundamentals of the gold producers based on their 2025 September results, then there may be grounds to say that this selling off in the past few days may have also been sparked by results that disappointed expectations. And we're going to dig into that in the member section shortly. So long story short, I believe that gold, the ASX Gold Index will have to look towards where gold and silver heads, whether gold and silver keeps its current levels without going down further to $3,800 an ounce and below $45 an ounce for silver. And if it does, then the ASX Gold Index could actually pull back further.
Right. Thank you so much for that, Mr. Brian. And I think there's quite a lot of insight that our viewers must have received from those comments. So thank you so much for watching so far, everyone. If you want to continue watching, we suggest that you go to the GoldHub Australia website, link in the description below, and take up our 5-minute registration process, which will make you a member of GoldHub Australia for absolutely free of cost. And you will be able to watch the remainder of the video, which is the content that we discussed from here on. So thank you so much for watching, everyone.